Hey guys, Saturday market breakdown. This is it. So basically, jumping straight into it, going with a DXY. Right now, we are still in that corrective cycle, and we're kind of making our way higher, which is nice. But by no means is this really buy or sell territory just yet, because we don't really have solid confirmation. What we really want to see is that price is going to do its thing, just kind of get a bit messy, as it does usually. Who knows, with news next week we may potentially just see something like this, and then price kind of corrects its way into here, ISM comes out, boom, and then we kind of NFP comes, then we're actually up here. So just want to bear that in mind, that we do have some interesting news coming out next week. I just think that we need to be a little bit more patient with DXY, because we're going to see a lot of volatility across the board. But we might see something like this, where if price does make its way up here by here, and then we push back in, and then we're ready for FOMC and so forth. On funded capital, probably not, but on personal capital, you could entertain a trade there. If it's FOMC, you really and truly, you'd want to take in additional protection, just because of, even with that, you just don't want to risk it really. Like, look at these massive pushes. Last thing you want to do is set a stop loss here, and the next thing you know, it pushes and gaps all the way up here, and then you've taken a massive loss. So something to bear in mind. But keeping that in mind, DXY is looking pretty interesting. Obviously, from an hourly perspective, that was from the 4 hour, and then if you go to the daily, you can see that in fact we are still within this massive corrective squeeze. And truly, I don't think this is the territory where you just want to be taking trades. This has a lot of potential to just keep going higher. So really and truly, I'm more on the side for this to go long than I am for it to go short just yet. But I'm not going to really be looking to just jump into any old trade. I'm going to be looking for something with a little bit more context. If for any reason we do create something with clear structure, then so be it. Then we can actually take advantage of something like that, where we basically have this, and then it's very deliberate and clear, and then we do that. We come in here, we tap into this area, we push up, maybe we get an entry in there. You wouldn't really want to hesitate on something like that to go long. And then next thing you know, we're all the way up here, FOMC comes out, you can actually hold through that if you want to, or to come out, and then trades all the way up here, and then you're kind of scratching your head like, hang on a second, we were so corrective, why did we just suddenly impulse? Well, these things happen, we go in phases, and technically we can see that this correction to the downside is now played, and then we've correctively squeezed higher, but now we're just moving in a running channel, and then we're squeezing at this point here, and then we just push higher. So there's a lot of context towards something like this, but I think this is highly probable, and I'm looking for something like that because it makes sense. So this would be kind of the go-to for the DXY at the moment, but I'd be patient with that because we just don't know just yet. JP225, now the JP225 is also something that I think is in very good territory, but once again, it's something that I would just probably be a little bit more patient with. Only reason being is we don't have the full image just kind of played out just yet, because on the weekly we can see this is, on the daily it's very bullish, and yeah, we tapped into this area, but it doesn't necessarily have to go from there. If you look at the overall structure, what phase are we in? We've pushed here, we've done this, we've pushed, and now we've done that. We could do this, and we can continue higher. There's no way to say that this has to go short just yet, so I wouldn't get too zoomed in on something like this, because this can easily just tag you in and out. And what you're really trading here, if you zoom out, is you're actually within this squeeze at the moment. So you'd want to see something very deliberate and clear, that price has cleared that, created deliberate continuation down here, and that you can take something like that into these lows and then see it through if the JPY pairs, related pairs, are going to be moving. But for now, don't get too caught up in something like that. The SPX though, on the other hand, now it's one of those ones where I am holding a hedge long on this at the moment, actually, on the US 30, but I'll go into that after. What I'm seeing over here is we've tapped into this, we've done that, and really and truly, from a 4-hour perspective, that looks quite bearish. But then from a daily perspective, this also looks like it could potentially go lower. However, if I really do evaluate this, it just looks like a range play for it to continue, and it just looks like maybe you know, this is going to just kind of trickle in this area, come back down here, create the floor, and then move higher. And then I wouldn't be surprised with something like that, especially looking at the weekly. It doesn't look like it's just ready to turn around. However, if we do get a sharp pullback, I wouldn't be surprised. It's just one of those ones where we don't usually get price just kind of, you know, trickle like this and kind of make its way lower, but we are getting that now, and we have to understand that, is this just moving like this to get to a area of interest to then reverse, or are we genuinely going to reverse or continue lower? And the only way we can really see that now is if we get deliberate price action. I think on the perspective of seeing something like that, I still think that's a little bit more higher risk because of where you're positioned on the higher time frame. But if we do by any chance follow through, and you know, we're down here and we get something clear, maybe something a little bit larger, to be honest, would be preferred. But anyway, we'll have to wait and see how that kind of formulates. Something like this kind of shaped up in this area, then we would be able to really just understand that, okay, hang on a second, this is clear for a continuation lower. Let's try get positioned in here to see if we can continue short. But really and truly, I'm not as favorable for the short just yet. I was, up until I kind of just really analyzed this and realized that, hang on a second, am I getting too caught up into the lower time frames here? And I think that's always a trap. Something similar happened on the US 30 as well, which I'll speak about. And let me just quickly go over here. So I'll go to the pink list. And let's just start with the US 30, UK 100, WTI. Yeah, okay. So this is an interesting one. So I'll just remove this for a second. And if you look at it here, what we had was, let's say we had this ray line here. We then came to this area here, pushed up and pushed back in, right? How did we approach that? Well, this is also something that I was looking at, and this is a subjective first touch, but we did kind of have this angle where you could argue that, okay, are we coming into here to sell? So then I looked at that, and then we had the push away from here, and then we had this formation, which only became clear yesterday. But before that, it was very easy to just do this, and then look at that as the position. And then when I went in there, I could see from the hourly, sorry, let me go back to that. You can see from the hourly that we did kind of get those double tweezer tops here. So at that point there, it validated my entry, took the entry here, and it was just about there. And it ran for around about 2% for me, and then suddenly pulled back aggressively, and I just kind of held the break even. Took the break even on that, and then kind of just took a minute and just kind of sat back and just thought about this. And I think it was roughly around about this point. I'm just going to remove this ray line and this one because we don't need to see it. I then looked at this as, is this actually the structure? So then I took a minute and thought about it, and I was like, okay, that looks very interesting, because we know that there's still the potential over the bat of the overall big structure that this could go short. So what would it need to look like? And then it was looking good on the 4 hour until we just had this huge push away. And then I was like, okay, that looks phenomenal from a high time frame perspective, but where are we selling from? And we're not really selling from the best place in the world, to be honest, right? Even though we came up and retested this area here and we did a lot, it did show a lot of stuff. So when I was correlating that with the SPX, it looked like it was going to go really short. And then we had that retrace candle there. On the SPX, we also had a really nice candle, right? I'll go here on the 4, and you can see that candle there, right, when that closed. But prior to that, we also had, was it over here? Yeah, so when we had that push through to the downside on the hourly, we had that retrace. And I think it was a 4 hour that I was just kind of really happy with, and I was just like, okay, this is awesome. I could take it here and I could crop it, put my stop loss around about there, and then trade through this. And I was contemplating this very closely, but in the end, it just wasn't really the one that kind of just jumped out to me. But the US 30, on the other hand, I was really looking at the US 30, and when I saw that push through, and I was like, okay, hang on a second. So if it wasn't going to go from there, and we have this now, could it go from here? So then I went to the 5, and then I saw this, and I was like, all right, cool. So we've got this, that, and then we had the commitment, the first trade there, which was pretty decent. I didn't take these trades though. I could have, but I didn't. And that one ran for a total of around about 3.9, 5.9 something. And then we had the next trade, which was literally just here. So we had the two bottoms, and then we kind of just ascended up into this. And then I saw that, and I was going to take this one here. I think I did take this one, and I ended up closing it a little bit sooner just to lock in a little bit of profit. And even if you went tighter, you really truly could, but if you, yes, depending on how aggressive you would have been, and that one could have run for roughly around about 8.62. So together you would have been running roughly around about 13 odd percent, 14. So that was basically the trade in total there. And then I'll tell you the reasoning of why I took the buy over here as well. So something that's very interesting about this is look at how price formulated here yesterday. When I took the trade in here to go short, which I'll just show you on the tweeter tops, you can see that we came in and tapped to this area and went, and I was like, that's a very interesting sort of scenario, and I kind of learned something from that, where if price is not ready to go and it responds from here and just rejects, is that something? Then I went and studied it across the board of quite a lot of price action. I saw it was very, very common. So then I looked at this and I was like, all right, let's see if we're going to fill this. Hang on a second, let me just put on the right one. If we're going to fill this to 90%, then there's a high probability that we're going to retrace from this area. So what I did was I looked at it closely, and I went to the 5 as well, just to kind of refine it and see it. And I was like, okay, cool, we've tapped into that. Let me see how this closes. And then I went to the 15, and then as soon as we kind of broke to these lows, I was like, all right, this looks super bearish at the moment, right? Bear that in mind. But at this point, I was like, this would be making so much more sense when you zoom out, you clear this off, and then you look at it for what it actually is on the higher time frame, and you're like, hang on a second, does this really look bearish from here? If it sold from here, what would it look like? And when I asked myself that question, I was like, it doesn't really go with anything really. Like, I couldn't really put my finger on it, and I was like, that's not really the structure. So then I cleared this off, and I was like, hang on a second, let me get into the 4. I took the low, and I was like, okay, so if I was essentially looking at this as the larger correction, then yeah, it has potential to go to the downside. But then when I looked at it on the 1, this kind of jumped out to me, and I was like, what if I evolve this and we were to do that, and then I was to evolve this and take it from here and do that, or even from the next point here, right? Just looking at this, and I was like, that actually makes a lot of sense, right? You've got basically your push into here, you've got your middle section, and then we could go from there. And I think I just convinced myself in the time that it was worth it. But also I knew that this was basically the point where I was very happy with that. Even though we did near miss this, I wasn't too bothered, because it kind of did everything it had to do, catching everyone on the wrong side of the market, right? Because I was looking at S&P, and I was like, S&P, you know what, it looks like it could really go short, and maybe a lot of people are trying to go short right now. So psychologically, wouldn't it make sense for the S&P to move higher, because it naturally does, right? So getting in strategically in those areas. So there was a lot of thought process behind it, but in the end I kind of just saw this as, you know, we've come in here, we've taken everything out, and now if we do retrace all the way back up, strategically I could actually get an entry in there. And then it was something like this, covering that low, and then it was in here. All right, I think I was a little bit larger actually, to be fair, but it was something like that. And yeah, overall I think it was a very strategic play. It was maybe very risky as well. Situationally I was okay to take it, but just wanted you to bear that in mind, that it's not just a trade that you would take blindly. Like, it's one that definitely comes with experience, and it could have easily tagged me out as well. Like, I accepted that risk as well. I just knew that if we're having this, and really and truly we're due for a pullback as well, like we don't usually just sell and complete and then kind of just continue. Like, it doesn't usually happen like that. So I kind of just went off a bit of experience there, and I saw that and it pulled back. So that was kind of it really, and now I'm just in for that long, and I just want to see how that plays out. So there is a lot of potential for this, because if you do zoom out to the daily, obviously sometimes when we're ready to go, we go, and that's basically what I'm anticipating. But there is a bit of indecision in the market at the moment across these US related pairs, so I'm going to be somewhat semi-aggressive with the management, just making sure that I'm locking in along my milestone goals, but right now it's looking pretty positive. The swaps were a little bit heavy on it as well, but I was happy once I kind of took the position. I evaluated it and then locked in around about here somewhere, and then I knew that, you know, towards the end of session sometimes we get major sell-offs, but in this case we didn't get it. So we just have to wait for market open. If market opens and we do something like this, we move like that, you know, I'm not going to be surprised. Like, it is what it is. But truly, I think it has no business doing that. We might get some liquidity. It might just sit in this area during Asian session, then come into London session. We move higher, and that's basically what I'm looking at. We also have news coming in on Monday, ISM manufacturing. So the nice thing about this is if we actually move higher and we're hovering around about here, I'm almost very positive that this has enough room to just kind of give it that impulse and move higher. So it will turn this position into a phenomenal position, but only because of where the positioning is. But we just have to wait and see. I mean, obviously, likewise, this can still go short. We don't want to just be, you know, speculating on which way the news is going to go. We just want to make sure that we're protected enough for if news did come. How well protected can we be on our accounts? But overall, this isn't the best structure in the world, and it's not the best trade in the world either. UK 100. This one's very clear as day. Essentially, I'm just looking at this where we've tapped into this. Are we going to continue moving, fill the bottom of this range? What's nice about this is if we do zoom out to the higher time frame, we can see that there is a massive run to potentially be played in here. So if we can get positioned well enough in this range and we get a clear continuation, this might be enough for this to kind of push through and then just continue lower. And that's what I'm really looking for. Being aware of some inflection points, but not being too scarcity of it, because these are not really the points where I'm really anticipating the price to just really turn around on me. I'm going to be aware of them, but really and truly, I'm just going to be looking at the bigger time frame and just looking to try play this. Obviously, we can get larger pullbacks, as we have seen across the board. It's just one of those ones that if we do just rally for any particular reason, then we're good to go. Obviously, because of the high time frame, it doesn't necessarily mean that we're ready to go either. As you can see, we are coming down a little bit more corrected than we would have wanted, and that could be a clear indication that we're not ready, and this can really develop into something that we are not fully prepared for. So right now it's just a general range play to see if we can get it. These trades are a little bit more high risk because they are coming in with a squeeze, but we'll have to wait and see. Maybe they could come in to be very profitable, but we are playing the high time frame here, so this is essentially it. Comes in, taps in, creates a clear section 1, pushes up, middle section, comes back up, third section, and sells. Won't be this clean, but hopefully will be clean enough to actually take an entry on. So US oil, I'm still waiting for it to come back into these areas here. I think this one just requires a good level of patience, because we can't really just take a trade in the middle of nowhere right now. We need to actually just wait for structure to show its hand. If this does for any reason, you know, come in here, drops off, taps into these areas, and then pushes up, and we get that IE, that's phenomenal. I think the risk entry does also seem appealing, but I think because of the size of the range as well, I just want to be more in the A game. But we can see in terms of a run, sequence is fairly clear, it just came from the middle of nowhere, but because we've had the impulse, smaller correction, a little bit larger, and then now we got larger, this could be enough to give it that really big impulse that we need to make that move higher. Obviously, there will be some small corrections on the way as well, so it doesn't really necessarily mean you have to catch a trade here. There could be more trades up here, and in fact, sometimes it's a little bit more safer once we're in the run that you can start taking these trades, but we'll have to wait and see for that one as well. Aussie yen. Aussie yen is a tricky one, I'll be honest with you, because we are approaching the high value area, and I've only put it on watch because we are, but it doesn't necessarily mean I'll take a trade this week. It just means that I'm going to be monitoring it very carefully. There could be some traps involved as well. Usually when price does come to these areas, it does either two things: either taps in and then really sells off and it gets very clear, and then we can really get positioned to go short, or it just messes about. And I wouldn't be surprised if something like that did happen, and then, you know, next thing you know, we're going higher. So be on the A game if you are putting Aussie yen on watch, because I think you'd have to take a very clear message. I wouldn't risk entry this at all. I would really wait for a clear message from the market. But you can see sometimes, like, you know, we reject from a certain area, we push away. We're not ready for maybe around about 2-3 months. Oh, I don't think that was 2-3 months, that was much longer. How long was this correction for? Let's see. This correction was, okay, yeah, 238 days, so almost a whole year of correcting before we had that huge push to the downside. Now, I'm not anticipating a year of, well, yeah, I'm not anticipating a whole year of correction, to be honest, but we'll have to wait and see as well. But anyway, it's looking pretty good as well. There'll be a lot of trades formulating across yen pairs if that did happen. CAD-yen has tapped into this area here, but you can see there's that area above, giving more reason for these yen pairs to move higher. But if we do get a clear message from the market, then we might be able to take advantage of that. We are just correctively squeezing, and it's phenomenal how when you study this price action, there's so much to learn from it. But it's one of those things where I'll just be honest with you, like, you want to wait for some clear structure. There was this as well, which is quite nice, but because of where it was positioned, you might be put off by it. But it's interesting that the cleaner structure we got was actually through the high, which is interesting. But there was a few structures within here as well that you could have probably deciphered and then basically taken continuation. But it seems like the cleanest ones are always in the most subjective areas as well. So something to bear in mind as well when you are looking for entries, that they may not always be in the best positioning, but they may still be higher probability. Now, we are pushing above the all-time high. Taking a entry here, I think, is even more risky than taking an entry here. Only reason being now is that you know, we basically could do this, and then if the sell comes in, you don't want to be caught on the wrong side of that. So you want to wait for the market to really give you a clear indication. But we are seeing across a lot of pairs that we are seeing some clean price action to the upside as well. So we just want to be waiting patiently. Again, we are looking for the sells, and I think so many people are probably looking for the sells right now that's probably one of the reasons why this is just continuing higher. And when people are trying to buy this, it is doing these like dips and stuff, but there is trades in here, I'll be honest with you. It's just one that I haven't really been putting a lot of focus into, and I think if I did put more time and focus into these yen pairs, I probably would have capitalized a lot more. But another one just to kind of put under your belt and just study. Euro Aussie. Now, Euro Aussie is an interesting one as well, because we are in this very corrective move to the downside, but there is the potential for further more short into these lows. We've broken this low, and now we're trading essentially below it. And what we're having here is we're creating continuation. So what I want to see is, can we kind of confirm two bottoms, whatever the angle, and then we come back up, tap into this, take out the liquidity there, and then we push down insurance entry and sell. And that's basically fairly simple and straightforward, and that's what I'm looking for. Euro CAD, likewise, I think, you know, we have the massive move here. We basically tapped into this point here, where I think this is a area where we could truly reverse. So we need to wait for probably a clear 3-touch structure to formulate, because that would really just kind of paint the picture. So what I'm going to see is if this turns into a nice middle section, and then we can push higher, and then kind of just near miss this, come down a bit and come back up, take out the liquidity and then sell. Push down insurance entry would still be preferred, to be honest, but we'll have to wait and see. And then basically, yeah, just basically go short on this into these lows, and then basically manage aggressively into them lows. Probably around about 80% of this overall move into that. So from 80% from up here, or yeah, 80% I'll probably be more aggressive with. So it's not a huge trade, to be honest, but it's in a clear run, and I think there can be a lot of advantage by taking something like this into this low to then go long. So I will be paying close attention to that, and also this inflection area here. I'll be more aggressive into that as well. GBP CAD, so GBP CAD is looking phenomenal, I'll be honest with you, because we've basically broken above all of this. We've tapped into that area of liquidity. We've now pushed away. We've getting a clear sequence as well. You can see here that we had an impulse correction, and now we're in that continuation phase as well down here. With the next correction, we're just basically waiting for the second floor to be created. Potentially we could just kind of tap in, create a base, and then move back higher, tap into these areas, push down insurance entry and sell. Risk entry could be taken here, but it could just really spike through, take everyone out and push back in, and I think that's something that could possibly happen, similar to what we saw over there. And I think if we just hang on to this and wait, we might find something clear. But truly, because of how we're seeing on the higher time frame, I wouldn't be surprised if when it does tap into those areas, maybe aligns with news or whatever, but then we get very impulsive price action and it sells off. So pending order maybe could be an advantage in those scenarios, but I'm going to keep it strict and just look for that insurance entry. Unless we have that clear structured approach, then I might just take it and add a little bit extra protection on top. GBP New Zealand, now this isn't the most favorited one I've got on watch this week, but also do like it because if I look at it from the daily perspective, I can see that yeah, we are in a squeeze, but technically if we look at it as an impulse, larger correction, and then we get the next impulse, this can really just kind of push out, tap into these areas possibly, and then next thing you know, we're in this channel, and then we could potentially see a reversal from those areas. So I'll be paying attention to this because there's a clear run. If we can get in from there to here, that's a phenomenal position, right? So then I go into the 1 hour quickly, and you can see here, even with positioning on this, perhaps it won't be as large as this, but even if I got in with 33 pip stop loss into that ray line low, I've got around about 11 to 1, yeah, so that's pretty good. I'm not anticipating this to just be one large bullish candle as well, bearish candle. It could take its time. As you can see, it is trickling and kind of just dabbling around, so it's one of those ones where you take it, you might have it on your portfolio for a fair amount of time before you even consider closing a position. So I wouldn't close or get too aggressive with the position straight away. I would kind of just give it some breathing time and see how it plays out. This can still develop into something else, we just don't really know yet. If this does for any reason kind of scoot back up, comes into those areas, pushes down insurance entry, that would also be a preferred entry for me, and then I'd still take that into the low. It's just the scenarios, but like I said, there's a lot of potential on the board right now. We can see that, you know, across the board there's so many different pairs shaping up at the moment. You just don't want to rush into something that kind of isn't really the highest or the best of quality, but if the context is there and it makes sense, then by all means take it, because you know we are getting a lot of liquidity coming into the forex market at the moment, which is nice. Aussie New Zealand's a fairly simple one. So we have that near miss gap here, we also have the gap over there, we're kind of pushing up in sequence now with push up, insurance, impulse, correction, impulse, next correction, and then impulse, next correction, and maybe a reversal structure, who knows. But that's basically the gameplay. I think we are looking to go and fill these liquidity areas now with that bullish momentum that we're seeing on the weekly. It would make sense, so I'll give this a little bit more time to just fully develop, and then once I have that clear structure, I'll say that section 1, and then perhaps maybe we come in here, create section 2. We don't quite get to the high yet, because right now we can't really establish the high. I wouldn't go with the expanding angle on this as such, because that's not my typical structure. I would just kind of look for something like that, which I know doesn't really look the best, but you know, it can still develop into something a little bit more clear. I think this one needs a little bit more time for sure, but we'll have to wait and see how this pans out, because if we can get clear enough structure on this, then we'll be good to go. But even something like that would be clear as day, and I'll be more preferred for this actually, to be honest, where we basically just kind of come up, we create the first touch now, structure's fully underdeveloped, so people are just kind of not in the right mind to forecast this just yet. Then we come down, tap into this, push back down, double bottom over here, as well as complete on 3 touch, reject, get a very nice entry over here, and then we play the run. And I think even if we did get a clear as day entry in here which, call it even 15 pips to be safe. Could go tighter, but always do it the wrong way, don't I? 15, 15, yeah, 15 pips. We'll then see that here with to the top of the structure around about 4.2 and then around about 10 to 1, so still decent in terms of a risk reward, and you know, a lot of room to play with this, so we'll have to wait and see. The next one is Euro New Zealand. Now, similar scenario, we have a near miss low. We don't technically need to, but because we're correctively pushing away from this, it gives me more of a reason to see that we could potentially just be coming back in for this. Now, there is this area here where we could just sell here, create continuation and move lower, but I'm more in favor for this to be tapped into. It doesn't necessarily have to be tapped into, because when you really do think about it, we have done more than enough, in the sense that we've retested this, we've then come in, we've had a little hook point there, we tapped into it, we pulled above, we retraced back in. Now, if we get deliberate continuation, we could go short, but I'm more in favorable to see if, and the 4 hour looks lovely on this, I'll be honest with you. I'll just go in here, and you can see how we just had full bodied, but then even here we had full bodied and then retraced higher, and it's easy to get caught in and out, and it is technically still within the squeeze. What I would like to see, but the difference between this one and this one is we did have a 1, 2, 3, but I would like to see that liquidity area be tapped into, push away from there, and I think that's how I would protect myself, in the sense of just not taking a trade where I know that this is the more probable scenario is for it to tap into here, push away, give me insurance entry and go, and that's what I'll be looking for, so I'll stick with that, to be honest. And then I think with news coming out next week, if we do get something like this where price is just kind of hovering in here, and then news comes out and it goes higher, then it is what it is. But if we do push down and we create continuation, and that's trading into this news, I don't think I'll be hesitant on taking that, to be honest. I would add a little bit extra protection, to be honest. If I take it here, I will put my protection like up here somewhere, and it would be reduced risk anyway regardless, but hopefully it doesn't shape up bang on news. I'm just hoping that maybe even if we kind of come in here and we shape up prior and we move away and then news comes out, I'll be more happy with that, because then at least I can protect myself, and if I do take slippage, it'll be a very small amount compared to taking the trade bang on news, which is awful. We don't really want to do that. I'd rather miss the position than play 50-50. But yeah, that's just something that I would want to bear in mind, that if this was to shape up, what would it look like? And it looks like it would shape up for New York session, and then coming into New York session, we do have news, so it's just something to just be fully aware of when it comes to taking a trade on USD Swiss. But it does look good for shorts, I'll be honest with you, because of where it's positioned. You can see that from a daily perspective, even though we had that near miss to the high, we've pushed away and now we've come back in and tapped to this area, but we did come in pretty impulsively, which is completely fine. We've come in, we've retested this, we've pin barred on the daily, which is nice. Now I just need to see that even on the weekly it looks a bit bullish as well, because we've come up with 2 candles, which is also fine because we've wicked through this area here, and then come back in. If I go to the 4 hour, you can see that there's a lot of indecision, and then we've gone bearish, which is also nice. It seems like it's making up its mind just to avoid the scenario that this becomes something it's not. Is I just want to wait for that insurance entry. So if we get pushed down, if this turns into a head and shoulders as well, I might possibly entertain it. I'm not too sure. I need to wait and see how the structure develops, but if I do get that clear follow through, heavy bodied candle, continuation, it's a no-brainer. I'm going to take it. I don't really care much for ISM as much, but it can be slightly more impulsive. I think the real one that you want to be careful is the ISM services PMI. It's the manufacturing PMI, which also, you know, once again, it's just news. And those are the main ones I'm looking at. I mean, just flicking through what I did have forecasted on the other pairs. Aussie CAD not really ready for me. Aussie Swiss think is still going to go long. Aussie New Zealand, there is a potential continuation, which we have. Aussie US dollar, I'd give that another week just kind of fully develop. But with ISM, actually, I might keep it on soft watch. Actually, let me think about that, because I'm just thinking with the news coming out, if price gets volatile, some entries could come across the board. I'll reevaluate the US pairs again actually before I formulate the full watch list. CAD Yen, you can really cover that. Swiss Yen, I wouldn't touch it, to be honest. It's just still in that squeeze. Look at that. Even though it's like, say, even if it completed on this, it's not really your typical trade. You know, you'd really want to wait for solid push down, continuation, and then, you know, just see what happens really and see if it continues. But there'll be an abundance of trades once these yen pairs sell. Euro Aussie, we covered it. Euro Swiss, now Euro Swiss is a tricky one. I did have a trade in there and I accidentally closed it. It was in my pocket, and the screen was open and it pressed it, so you got to be careful of that one. It's happened to me before as well. So yeah, so essentially basically had this where we kind of filled this wick. We then created this inverse head and shoulders, left shoulder, head, right shoulder, and then we created the continuation, and then we pushed higher, and that was basically what I was looking at. I would be running a total of around about 4%, and then now it's pulled back. I'd be still locked in around about 1.5%, to be honest, and then I'll just manage that accordingly. So I'm shadow trading this one because it was a mistake, but I still walked away with a percent on that one, but like I said, it was an accident. Euro GBP, probably fill the gap now, completes on this, pushes down, gives me a hover, and I get to go short. Don't think it'll be ready until either the end of this week, or, I mean, I will probably still keep my eyes on that one on the side, but probably not going to add it on watch. And then maybe towards the end of the week, if it does start formulating that hover, and this is all played out, then I would entertain something like that. I'll just move on to watch. Euro USD, yeah, it's one of those ones. If the news comes out and it goes bullish, what would it look like? Well, it would make sense. Then it kind of comes up here, plays. Yeah, I mean, there's so many things that could happen. I'm just going to wait for that one though. Euro yen, high value area, trickling, wouldn't really bother it. But I did kind of find a little strategy with these yen pairs in these market conditions, which you could make consistent profits with, which has nothing related to how I trade, but it's so simple and so easy, where it's literally, if you take the daily and you literally open a buy, let's just say you saw it here, right, even here, the worst part, right, you took a buy on each bullish candle and you put the stop loss below, right. Now in this scenario, you would have run around about 2.6, you would have done the same on this one again, and regardless of the scenario, you'd do the same thing. You'd be taken out on that one, then you'd do this one, and then over here you'd be completely like, okay, this doesn't work, right? But then what happens is when the market changes and it's in clear trickling conditions, let's just say you do it again here, regardless of where price is, you just keep doing it, right? And I wouldn't say you do it on 1% or even 0.5%, I'd say you do it on like less, but you know, even so, you just keep stacking them. Eventually, you know, and you just do that, go so on and just study that throughout, you'd actually end up with a pretty decent amount of percentage. And then obviously during these periods, it wouldn't be as profitable, you'd take a lot of break evens and a few losses, but when it does go through the trending conditions, boom, it's just flying. In fact, you can even take it to a different time frame as well, but perhaps maybe it's not very sustainable and not really the way you want to start trading or build your consistency on, so I'd probably avoid that. But I was just looking at it and it was very interesting. GA, next one, interesting one actually, to be honest. It's very close to this low. If we near miss it, come back up, and we tap into this area and then push down, get an insurance entry, there could be potential for a short. But you know what, GA is not really my favorited pair. I think I'm more in favor for this to just kind of push through the low, push back up, insurance entry and go. And once again, this is another one that could have made it on watch, but I'm just going to leave it off, and then if just want to see how it formulates and see what happens really with it, and then maybe I might entertain this one if it shapes up, but it's really just dependable on price action. GC, already covered that. GBP Swiss, I'm not favorable for this. I know some people are looking at this for the short right now. I just think when I go out to the daily and the weekly, this just doesn't look like my typical selling structure. I think this can just get messy, and I'm not interested in that at all. GBP US dollar, squeezing, but the nice thing is it's squeezed and broken below this low, so we just need to see clear push up now, continuation, and go. So this one could definitely be one to keep an eye on for next week, especially given that we have a lot of news coming out on the related pairs. GJ, same situation, it's just trickling right now. Same method could be applied on this, by the way, as well. Something to just look at. New Zealand CAD, yeah, it's just one of those ones where squeezing probably comes into this area before we reverse. It would make sense for that to be a larger sort of something, but I'm not interested in New Zealand Swiss right now. New Zealand CAD. New Zealand Swiss does look like it could go long, but at the same time it's still like, what is that? Right, that's just a squeeze. What if it did this? Like, I wouldn't really be surprised, so I'm gonna just not bother with that one too much as well. New Zealand US dollar, again, I'm gonna probably put that one on blue. New Zealand yen. So New Zealand yen was one that structurally I can see that if I go to the 4 hour, we kind of have that squeeze, push up, and then we get momentum kicks in. That's something that if that did happen, okay, I wouldn't take the trade there. I'd probably wait for it to come a little bit lower, like down here somewhere, but I was just looking at that and I thought that would be a very strategic short, but at the same time, looking at how the yen pairs are moving, I don't want to just be shorting straight up here. I'd wait till price is just really deliberate and clear and we're in a rally. There's a lot of missed positions and FOMO and all of that stuff going on. That's where you want to be. That's the area, the market conditions I want to be in, where market's just rallying, and even if you made a mistake, you still make a profit a majority of the time, which is pretty good market conditions. USD CAD is an interesting one too. I think with news coming out next week, this could get a little bit messy as well. It's just like that, it's within this range, but I wouldn't be surprised if news just tapped in here and then, you know, kind of make our way back up. That would be nice, but I'm not going to put New Zealand USD CAD on. It's funny because in 2021, 2022, I would say USD CAD was my favorite pair. Around about, where is it? If I go back to, yeah, around about these, I wonder why it was actually, yeah, around about here. So during this corrective market, they're probably, yeah, I don't know why I actually liked it so much. Why? Maybe because I studied it a lot. But yeah, USD Swiss we covered, and then we've got USD Yen. Likewise, I don't think that's one you want to really be dabbling with too much right now. And then USD ZAR, likewise, there's not much to really report on that. So in terms of those pairs, not really much. I think with these indices as well, though, they do look like they could be going long. I'd look sharp for Aussie 200 though. Aussie 200 could actually come in with the goods. So I'll be putting that one on blue actually. Maybe I might move it on watch, to be fair. If we're in a momentum run, we get them clear continuations and it just moves higher. It does look like it could really do that, especially looking at how some of the US related pairs are. DAX as well, but the only problem with the DAX is I just don't like the overall squeeze. If we did clear out of it, then I'd be looking for some stuff up here to kind of play that run from A to B, and see if it kind of comes back up, but I'm not interested in trading within that right now. UK 100 covered that, US 100 covered that, US 30, oh I didn't cover the US, yeah I did, US 30, yep, and then even with the US 100, it doesn't really look like your typical middle section as well. Like I wouldn't be surprised if it did come lower, so it's just a risk you'd have to be willing to take, and then don't really look at those much. Gold, so gold's an interesting one because we have tapped into this area of liquidity and we could sell, but I'm not too convinced with it. I just think gold could really be a trap at the moment. It does some sort of crazy shit and then maybe it goes from there, who knows, but I'm not a big gold trader right now. Silver's a bit disappointing, to be honest. Yeah, I did make some money on it actually, and I'm happy with that because I did lose money on it previously. I actually lost more on silver than I've made, but overall silver's got potential. It's just I don't like where it's coming from, and I think for that reason I just leave it out. Natural gas actually looks pretty decent for shorts. It's just the broker I'm trading with just doesn't have it. WTI covered, palladium to the upside. Platinum's a bit corrective. Wouldn't be surprised if it keeps trickling and then just kind of makes its way up. Copper actually had a decent trade in there. Just over here there was this where basically had the accumulation of all of that, and then we had the candle in there. And if you look at it from the 4, it's very clean. So we basically had this, and I was quite interested with that. I mean, I would have taken it, to be honest. I would have set it just probably around about here. Stop loss I would have been happy to crop that, to be fair, and I would have taken it very aggressive like that, and then just playing it to the low for 2.63. But overall I just kind of left it and was kind of like whatever. Coffee, cocoa, these are new ones that I've added on board because I've just noticed that my prop firm actually allows these. So I've been studying them a lot, and during the summer periods, corn, wheat, and these ones, soybean, very interesting. Very, very, very interesting. I wonder if soybean's ever going to crash to zero, honestly, because it's a very bear market. Like, soybean just sucks. There was a clean entry there, you know. Look at that. It's just, yeah. So soybeans are nice, man, honestly. Like, actually all of these indices, commodities, agricultural products are really interesting. I'll be honest with you. Wheat as well was very interesting. From a weekly, daily perspective, you can see that it's on a strong decline. Corn, even better actually. You know, it's funny because I was contemplating corn here, and this was like when I didn't even have it on my watch list, and I was like, oh, interesting. And then it's just one of those ones where I think when you have a large personal amount of capital, you can position yourself and just leave it on your portfolio for long-term positions, and then just manage it week to week, and so forth. But yeah, there's a lot of potential across the board. And then obviously going over to the BTC now, the BTC has been in this accumulation area. It makes sense after all that volume that it's built for it to now just kind of do its thing. So don't be surprised if we're in here for however long before we go. But at the same time, it doesn't really have to take that much time. It can just really surprise you. It can come down here, next thing you know, we're all the way up here, right? These things can happen as well. It's just you have to take a message from the market. But truly, I don't really believe that set for BTC shorts just yet. I'm gonna wait and see how that formulates, and then take advantage of it when the time comes. But I think I'll be ready for BTC longs when BTC longs are ready. I think it's waiting for me. I think the BTC is waiting for me so roughly around about December this year, I'll be ready. I'll have some Bitcoins, and then I should be long with Bitcoin. And yeah, that's basically it really. So yeah, thanks for watching guys, and I'll catch you guys in the next one.